really, at the end of the day, it's just a matter of a macro market. It's just what happens.
That's why it's really important to have a plan. Have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this Degen?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about impermanent loss.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so where you can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
What is up, Degens? We got a full house tonight, and we are excited to revisit the perfect storm theory. Could this cycle be a super cycle? Could we be seeing unprecedented amounts of gains through 2025 or longer? This is going to be an episode you do not want to miss. So strap in and get ready for some hopium, hopefully. We are going to be talking about the Bitcoin ETF and how it's looked since launch, all of the parties involved and what their holdings are looking like. We actually have two new Bitcoin spot ETFs that were filed this past week. And we have a company called Vanguard that fired their CEO. And I wonder if it's because he said they're not going to allow a Bitcoin spot ETF in their company. So that's a very interesting thought as well. We'll touch on the Ethereum ETF. We will be talking about Hong Kong, China, retail investors, the Bitcoin halving coming up, Bitcoin dominance, and we're kind of just going to rehash a lot of the topics that we had in episode 4. So it's really interesting to see what's changed in 7 months, and if we have the same thought process, if we have the same outlook for this bull market as we move forward. And we might, if we have time, talk on the Richard Hart coins. There's been some movement there. There's been a lot of DAI moved around from the SAC and OA addresses, and they are yielding a ton of money right now that could pump the Pulse Chain ecosystem. So, Nate, my friend, Perfect Storm Theory, you excited?
Oh, I'm excited. Perfect Storm, man. The more and more like I look into this stuff, the more and more I'm like, wow, look at this puzzle piece. Fits perfectly right there. And it's like you can like almost see the future at this point by just putting these pieces of the puzzle together. It's pretty awesome. I love it. And then what's fun is when you make these speculations and you're like, well, if this happens and this should happen, then that should happen. And then it does happen. You're like, yes, got it right. Man, I'm bullish. I'm happy. I'm having a good time over here right now.
Panel, thank you for being here. What is going on, Mr. Dallas, Mr. Will Stevenson?
Oh, I am just chilling up here in the old shipping container. I'm going to be floating around Texas for a little bit longer before we head up to another part of the country to go do some more tower work. So I'm stoked to finally get back in the air. Other than that, things are going smooth. Things are going well. Just enjoying these pumps.
Zenith, from one book club member to another.
Yeah, we are hanging out. We just covered $100 million offers. Will hosted our first episode, and it was a classic, I got to say. We had a lot of fun with it, and it was nice to do a bit of a shorter book this time, so it felt good. But yeah, I'm hanging out here, getting just ready to go to Las Vegas and punish my body for what is probably going to be 4 days of straight fun. So I'm looking forward to seeing everybody out there.
Awesome.
Yeah, only you are going to be the guy who goes, I'm going to punish my body with fun. What the hell?
Well, no, we're going to stay up late. We're probably going to do some drinking. I'm not going to lie. There's going to be a lot of sun exposure, and I would like to not completely jack up my workout schedule, so I would like to bench press at least one day while I'm out there.
Big plans, but it'll be fun. I mean, all those meetups were always a good time, and I can't wait for the bull market meetup for the Degen Roundtable in their community next year. That is going to be absolute fire. That is going to be absolute fun, and it's going to be a celebration of all of us making it. So if you're here, if you're watching, if you're on our Telegram, the chances are you're going to make it. But you have to continue to learn. You have to continue to dive into the markets. You have to continue to decide if you want to press the buy and sell button yourself. because we're not going to tell you what to do. We're not giving you financial advice. We're just giving you our opinions. And Josh, what's going on, buddy?
Oh, everything's good, man. Everything's great. Second stream of the day. Earlier today, me and Nate were on Hex Vision's channel talking to him, so that was awesome. So second stream of the day. You know what I love most about this topic that we're talking about tonight? You know, as content creators, it's easy for us to watch other content creators and sort of borrow material or say, okay, you know, this is what the majority of the people are talking about, this, that, and the other. This concept that we're talking about was conceived in a sports bar in Washington, D.C. when me and Brendan were hanging out for the first time. And then we brought it to the group, and then it's just exploded into this sort of theory that we come to agree with and we think is very plausible. So this is this is our original thing, and that's why I love talking about this. And I think the conversation is going to be great tonight, and especially with the bullish momentum that we're seeing right now, I think it's very plausible for something like this to come up. But yeah, things are great. Looking forward to it. Agent Jay, what's going on with you, man?
Bro, you know how it is, man. Same shit, different day. It's a great weekend for sales. I'm in the process of moving now, and so I was hoping that before we get everything loaded and ready to go into the U-Haul truck, that my customers would come and do me a very big favor and just cleaning out my inventory. And I think they heard my prayers. And yesterday, a whole bunch of people just came in, cleaned about half my my inventory. So that's good. Enjoying these green candles. If you are in our Telegram group, last week I did like a few emergency calls throughout the week, market open, midweek stream, to update people on exactly what was going on. And I told them, look, are we potentially in an overheated area? Yes. Do we have a potential that the right translated cycle is going to be a bit muted, only at day 37? Yes. But I also gave the super bullish scenario that I told folks that still has a very high likelihood of occurring. And we just got that confirmation today after the absolutely Chad weekly green close that Bitcoin and Ethereum has given us. So I'll be going over that a bit later on during our analysis. But yeah, man, it's been great, exciting. Just strapping in for the ride, brother.
I mean, people are getting excited this week because we're just seeing some rockets, right? We're seeing things like Pepe. We're seeing things like Ink. We're seeing things like Shiba Inu come back from the dead. We're starting to see Phantom rip. We're starting to see Bitcoin and Ethereum stay strong. You know, so there's a lot of excitement out there in the market. But if you aren't in the market now, you haven't missed the boat, right? We're going to get a pullback at some point. We're going to get a pullback at some point. We're going to have a large potentially face melting end of the year and into 2025. And so don't feel like you've missed the boat if you haven't packed your bags. But you certainly are going to want to start packing your bags soon. Get some skin in the game and be ready, because this is just the tip of the iceberg, really, so to speak. And some of the predictions that we're going to get into are pretty exciting to talk about. And, 7 months ago when we started this, it was just that, a theory. But now, as we're starting to see blocks of what we had mentioned fall into place, it's starting to paint a little bit of a puzzle that we're starting to be able to see the bigger picture, right? So those puzzle pieces are falling into place little by little. And of course, the U.S. government could rug us at any time with a macroeconomic war, another war. You know, there could be a black swan event. So you have to be prepared for other scenarios. But those puzzle pieces are falling into place, and it's looking pretty good. So weekly bullish close. I want to give a few shout outs before we get into the TA, and then we'll dive into the perfect storm theory. Mr. Angry Twinkie, thank you for hopping in. First comment of the night, like 2 hours ago. Thank you, buddy. Appreciate it. Funkmaster Hex in the house. What's going on? Good evening. Good evening. Hexican Lost in Asia. Great to have you, my friend, as always. Thank you for joining. Colonel Giggles, laughing all the way to the bank this week. Thank you, brother. Yeah, glad to hear you're feeling better. Glad to hear it. Brother 64, a great call with this man, and very smart man over there. Brother 64, as always, thank you for having me. By the way, side note, I started to write you a message because you messaged me, and I just realized this second that I didn't finish that message nor hit send. But I haven't forgotten about you, my friend. So yeah, let's chat this week. Chad Donnerschwantz, if I said that correctly. What's up, base buddy? Thanks for coming. Centurion 54X, what is up? Sold some Pepe profits to buy stupid woman coin, triple the Pepe profits. I mean, Jay and I were talking about this when people were buying Pepe. We were like, we're going to wait till it drops. We're going to wait till it finds a new low, like most meme coins do. And then we're going to buy, after its first gigapump. And we bought really close to the bottom of that drop. And so, yeah, we took some Pepe profits this week.
Before you move on to the rest of the chats, I wanted to share a learning experience with the gang and with the community.
Yeah, brother. Go ahead.
So, since we're on the subject of Pepe, I've been talking about it. I spoke about it extensively last week, shared the charts, shared the predictions with the gang. And here's the thing. So, I took profits on Pepe, and so this was a market order. However, I had also set a limit order on Matcha. But when I did the market order for my sell, right, I thought to myself, okay, well, there's obviously not enough Pepe left in my bag to fill the limit. However, rookie fucking mistake. Matcha does partial limits. And so the limit still got hit, and it freaking dumped the rest of my Pepe into USDC. Now, of course, woe is me. Jay made a little bit more profits on Pepe. But I'm not upset. I'm slightly upset about not like catching the new all-time high. What I am upset about is the rookie fucking mistake, which I want to reiterate, right? Everybody, even though you've been in this game for a very long time, you will make those mistakes periodically. We're here at the DRT to hopefully help mitigate some of those mistakes from happening to you. And so learn from the mistake that I made. Know that Matcha does do partial limit fills. And so don't make the mistake I made of accidentally draining your moon bag into more profits, but not as much profits as you could have possibly made. But I just wanted to share that story, bro.
Yeah.
You want to hear something funny, Jay? Also, I don't want to say it was a mistake as much as it was like that. This is what a rookie would do. I literally had Pepe still on crypto.com. I completely forgot about it. I was like, oh, maybe I should buy some. Wait, didn't I have? And I go and look. Yep, there it is. It's sitting right there. I've just left it on there. I left it on the exchange. Everybody throw tomatoes at me.
Little moon bag you forgot about. A little stash you put under your pillow in the back of a closet. And hey, where'd this come from? You know what? Not a bad problem to have. You know, no harm, no foul. So let's get the rest of the chat real quick, and then we'll get to Agent J and his TA. No Money Mike in the house. What is up, buddy? Thanks for joining us. Smooth Brain, thanks for joining. Wouldn't be able to stream without our fans and without our community. Best community in crypto. I have been saying that all week, and I believe it. Tam, thank you, number one, Tam fan. We appreciate it. Appreciate all that you do for our community, what you do for the Hex and Pulse Chain communities, and all the positive energy that you put out there. So thank you. Paul Sachs. We got some hopium for you, brother, and I am excited to share it. I think episode 4 was our first show that we sort of pumped some hopium into people, and that was back when people were still like, look, we were just crossed over 1 trillion in market cap 7 months ago. Now we're at almost 2.5 trillion in market cap. So where we've come in 7 months is great, but you know it's interesting. So Dre Sims. As always, brother, active in the chat, active in the community, active watching the videos. Thank you. Bradley, our buddy. Feels bad, but, you know, it doesn't feel bad. You can't beat yourself up for, you know, probably getting a 4 or a 5 or a 6X on the money.
Profits are profits, man.
Right? So
profits are profits.
Exactly.
Can't complain.
Same. I left a little moon bag of Pepe, but I took most of them in profits. And if I had taken it 2 days later, would I have gotten some more? But I'm still happy with those X's that I gained, and I got a little moon bags. We'll see what happens. We'll see if it goes to 10X from where it is now in Rivals Doge market cap, right? So I'm really curious if Pepe can reach a Doge or a Shiba move in this bull market. I mean, it's the number 1 meme coin. It's ranked in the top 50 now in all cryptocurrency coins by market cap that are actually properly calculated. We know that there are some that have higher market caps that are not properly calculated and not in those top lists. I can name a few off the top of my head. But, you know, for the people that want to list them, it's top 50. And it's 10x away from Doge in market cap, maybe a little less with its pump today. But think about that, right? Could Pepe do the Doge and Shiba Inu of last cycle, this cycle? That's interesting to think about, isn't it?
Can Pepe screw the pooch? I think so. If there's one meme coin right there that has like dug its roots so deep into the consciousness of the market, it is Pepe. So out of every meme coin that I could potentially bet on, it would be Pepe.
And don't get me wrong, I plan on picking up some more Pepe when it dumps this summer. You know, I'm going to have a bag of Pepe for the end of the bull market because who knows? Who knows? Thank you, Mook. There's always going to be a should have, would have, could have situation in crypto. Absolutely. Absolutely. But you can either beat yourself up or you can learn from it, right? Jay's talking about a learning experience. And that's the difference, right? It's positive outlook, positive mentality, bettering yourself and learning from your mistakes rather than beating yourself up, rather than getting down on your luck. Take what you learned, implement it, and improve in the future. That is what crypto is about. Crypto isn't about getting rich quick. It's about personal growth. It's about pumping our bags later in the time. But guess what? We're going to make mistakes. Okay. I think that is about all I got. Zach, Ken, hey guys, what's up? What's up? And let's hop into this. So we have a really important bullish weekly close on Bitcoin and Ethereum. So Agent Jay, why don't you take us through at least the chart for Bitcoin?
Yeah, for sure. Before I hop into the very dry numbers of the chart, I did want to share something with the group real quick because you mentioned this man earlier, Mr. Let's see, Mr. Tim Buckley of Vanguard has a so you said fired, but the media is going to say step down, right? And so he's set to retire at the very end of this year. So for those of you guys who don't know, like Brendan mentioned, Vanguard, one of those big asset managers who just said, we're going to say no to the ETFs. And their board of directors apparently saw exactly how much BlackRock and Fidelity were enjoying their profits, how much money they were making with the ETFs, and they decided to boot Mr. Tim Buckley. And when this tweet came across my desk, this is the first scene that popped into my head, and I would certainly like to share it with you guys because you'll know exactly why it's so appropriate.
Dude, that was so hilarious what happened to him. It's like, oh, you messed up, man.
Oh, Nate, you'll like this.
What? But you can't do this to me. I started this company. You know how much I sacrificed?
And there you go. Oh, Mr. Tim Buckley. Let's see. Who knows, man?
Bye-bye, Timmy. I'd love to say I'll miss you, but I won't.
I know, right? Mr. Tim Buckley might turn into the next Green Goblin. Okay, so with that out of the way, let me go ahead and take you guys through the Bitcoin chart because my goodness, unless you have been sleeping under a rock and not have been paying attention to the emergency streams that we have been doing in our Telegram chat, then you have missed out on all of the gains that Bitcoin has been making. As always, we like to start from the very, very, very high 10,000 foot view from very high up in the air to give everybody a perspective, right? To set your mind frame correctly before we go down and analyze what is going on in the very small degenerate time frames. So here we are on the monthly chart in Bitcoin. And as you can see, we have had green after green after green months ever since August of last year. You have 1, 2, 3, 4, 5, 6, 7 green months and counting, which is very characteristic of your macro wave 3, which Bitcoin currently is in. And so do not allow the small sideways action or small corrections that happen on a daily basis to get you concerned, because this is the view that you should be focusing on. Macro perspective, wave 3. It is time to make some face melting gains, and Bitcoin is certainly leading the way. So now that we've gotten the macro view out of the way, let's go ahead and switch over to the daily chart, We are on day number 41 of Bitcoin's 60-day cycle. Let me actually adjust my time tool there. And like I mentioned earlier in the stream, there were certainly indicators that were telling me that Bitcoin might have exhausted its move to the upside. However, as I will go over in the Elliott wave analysis that I will be doing here shortly, there are still some room for upside momentum based on the structure of the last leg of the movement here. So we are currently at 63,622 for Bitcoin. Can we expect this run to keep going up? Absolutely. Like I said, on average, you expect Bitcoin, when it's a right translated cycle, to keep moving and looking for new highs all the way up until day 50 of the cycle and beyond, before finally starting to come down and look for a cycle low. Now, why is that interesting? That is interesting because day 50 overlaps with this time frame that I have outlined here for you, which, for those of you who have been listening over the past weeks, assuming that the halving is going to occur sometime around middle of April, so that's why this marker here is set for April 15th, we get a dip on average 35 days prior to the Bitcoin halving, which means our cycle low overlaps, or our potential for a cycle low overlaps with that time frame. Bitcoin just decided to give us a gift of an extended 60-day or a bullish continuation of the 60-day cycle, and I believe that there is certainly a little bit more room to go. So, what are our potential targets? As always, I will give you both the bullish and the bearish targets because the bears have to be given their due. So, firstly, if this move has exhausted, because as you can see here, you have a 1, 2, 3, 4, 5 looking to finish. So, if this move has indeed exhausted its move to the upside, what can we expect in terms of potential pullbacks? Well, very simple. You take your fib tool from the start of the move to the very top, and you can expect Bitcoin, if it were to have a very steep correction, which is characteristic of a wave 2, even though this will be a local wave 2, the rules, or the guidelines still apply. You can expect anywhere between a deep retracement of anywhere from the 0.5 fib to your 0.786, which would mean a deep correction for Bitcoin expected to fall anywhere between $51,500 and $44,000, which lines up quite perfectly with a few key horizontals here that you see on the chart. As always, when we have reclaimed a cycle high and have turned it into support, every single time that Bitcoin falls, well, not just Bitcoin, but any asset falls back down to a cycle high, it will serve as strong support. And looky here, that just seems to, line up fairly nicely with the golden pocket here. This is the, as my name would tell you, this is the great value area that investors look for to re-enter the market, because this is indicated as an area of significant value. Lines up very nicely for the prior cycle high. So expect, if this move were to be exhausted and we are going into a very deep correction, expect anywhere between 51,500 to 44,000 to be your key areas of support. However, that is just the fairly bullish scenario. Bearish scenario. What if we get the extremely bearish scenario that the perma bears like Capo have been hoping for since the beginning of this year? Well, very simple. I mentioned this was a 1, 2, 3, 4, 5 Elliott wave structure. Well, guess what? This can also be a 1, 2, 3, 4, and a 5 looking to finish this wave 1, right? That's also a possibility, which means if we were to get the super duper pooper scooper bearish scenario for Bitcoin, you can expect price to retrace all the way back down here between $44,000 and $33,000 Bitcoin. Once again, expect price to find support at these major areas of price consolidation between $44K and $40,000 Bitcoin. $40,000, not only is that your golden pocket, but that is also a psychological number. People like taking profits and buying into whole numbers. Okay, so expect this area, if we were to get a super deep retracement, to be your targets. However, I do not believe that this is going to happen. There's still a possibility, but a very unlikely possibility that the bears are able to push the price down this significantly, unless, like Brendan alluded to earlier, we get some kind of major headwind for Bitcoin, like war, like the upcoming a reversal of interest rates. Those can certainly help push this price down. But as I've been mentioning over the past few months, the bears can't even push Bitcoin back down below 60K. Hell, they had a very difficult time pushing it below 50K when they tried, and they failed. And they barely pushed it below $40,000 when that was the area we were trading in. They pushed it all the way down to here at 38.5K. And so do I think that the bears have a prayer sending price down all the way back to $30,000? I don't think so. But as always, got to give the bears their due. So those are your downside targets. Now, here's the fun part. Where can we keep heading up to in terms of price? Well, I think a very obvious answer is we can just punch past this all-time high, because Bitcoin has reclaimed every single major fib during this move. It has now started to build momentum above its 0.786 fib, which means there's not a lot left up here in terms of resistance. As you can see, there's not a lot left for the bears to put up some resistance. So what potential price can we expect to go to next? Very simple. Take your fib extension tool from the start of your move to the top of your wave 3 to the bottom of your wave 4. Very common extension patterns here for Bitcoin, anywhere between 60 to 61,000, because that is your 0.618 and 0.786 fibs. These are your very common extensions, but as you can see, Bitcoin has started to build momentum above those fibs. So what can you expect? Well, very next areas is this area between the 1382 fib extension and the 1618, which is a new all-time high, $70,000 to $74,000. All possible because of the significant upside momentum that Bitcoin has displayed over the past few months. Now, if you want a little bit more accurate prediction, what you can do... Oh, actually, no, that was it. Well, there you go. That was it. That was my price prediction for potential upsides. You can certainly expect Bitcoin to try and make a new all-time high. Look for 70,000 if 69K breaks and the bulls maintain momentum. Expect 69K to break. 70,000, 73,000. That's the range that I am aiming for during this move if 69,000 was to fall and the bears put up absolutely zero resistance. So, questions, comments, concerns for the... before I pass it over to the panel, I do want to shout out one of our members. He's here in the chat, Mr. Kenpachi Zaraki. Apparently, Kenpachi, unfortunately, has had too many bears whispering in his ear, and so he's been a little bit down. Well, I'm here to tell you, my friend, and the rest of the panel, you have a lot more time to accumulate. There is still potential for you to make anywhere between a 10 to 30x, right? So don't let the bears discourage you from investing in this market. We still have a long ways to go before Bitcoin and the alts have been exhausted. So, get a bit of perspective from the team and from your community at the DRT. We have some bears in there, but we also have some bulls. So listen to both sides. Go ahead, panel. Give me your thoughts, questions, and concerns for this analysis for Bitcoin. What do you think is going to happen within the next week? Because next week is sure as hell going to be interesting.
Actually, I just got a question, Jay.
Sure.
All right. Since you are so good at this and you can see the future, when Lambo?
When Lambo? I mean, 2025? For some people, they're already Lamboing out from the Pepe profits.
Dog with a hat. What was it? It's at like,
man.
I think it's at 22,000x now. It just keeps
Yeah.
going up. That's a wild one. Actually, there's a reason for that. It's because of Bonk. So on Solana.
Oh, because they're on Solana. Yeah.
Yeah. It's on Solana. and Bonk was it's kind of like a Pulse X for Solana. And so it has like a whole buy and burn type of deal, and it's, you know, a Dex and all that. But then it was paired with Dog with a Hat. The hilarious thing about what ended up happening there is there was such a community that ended up getting around Dog with a Hat, that when the original creator of it rugged everybody, everyone got pissed off and dumped more money into it, and it just shot off. It's a very interesting story when you look at it.
Hey Nate,
again,
how about the other dog coin? Have you heard about Kakinu?
What?
Bro, these guys think they're fucking clever, bro. Cock Inu. Come on, man. You guys think you're cute, bro? These guys think they're cute, bro. But I digress.
Back to the topic at hand. Will, Zenith, anything you guys want to add TA wise, or anything that looked strong, or Josh, that Jay talked about?
The only thing I have to add is, if we're looking at the 60-day cycles, we had a high, if I guess you could call it, yeah, today is the high. Look at that, 41. So it's a bit of a right translated cycle, which means we have potential to run a little bit longer. However, we're effectively 2/3 of the way through, and we've almost spent about a month above the overbought signal, because we on the daily, we hit it on the 9th of February, and obviously it's the 4th of May. And looking back at the last two times that we've sat this high on RSI, it lasted for about a month. So I'm not saying it's a perfect pattern that's going to hold true, but the overbought signal it's coming in decently strong right now. And we are starting to approach the end of the 60-day cycle. So I know it's not like the super bearish case that we're going to drop all the way down to 13,000 Bitcoin and set a new low. But like, yeah, a retracement or a pullback or a retest of some lower support level would make sense. However, at the same time, I don't think any of us have expected this rocket ship to have this much fuel in it already. So like you guys have been saying, I would not be surprised if we touch all-time highs, either honestly this 60-day cycle or the 60-day cycle that includes the halvening, which, by the way, is currently estimated to be the 19th of April.
Yeah, the more and more that I look at this chart and the current macro conditions, it is almost identical to the 2017 cycle. It is almost identical. And when we get farther along in the conversation, I'm going to pull up my chart and I'll elaborate a little bit on that. But it's looking very similar, almost identical to 2017.
And here's another thing, right? One more thing that I want to add. There is so we are now just starting to see the very first sign of divergence, of bearish divergence on the chart. So usually we would have significant divergence already. So just something to add. We are on the oversold, but as everybody mentioned, we still have potential to run up to the upside. So just wanted to add that into there.
Yeah, it's a good point. Yep. Time, money, up. Will, you want to explain what you're showing there?
Yeah, so this is basically, if you just wait long enough, it goes up eventually. So you could do the math, and you could look at all the cool green little squiggly lines and stuff, or you could just hold it, see where it goes. That's all I got.
Absolutely. There's nothing wrong with that. Buying and holding, it's safe. And when it's at the top, sell some. When it's at the bottom, buy some, right? Like that's the basic gist of any market.
I'm always happy when the price is high. I'm happy because I can sell. When the price is low, I'm happy because I can buy.
Yeah,
that's all you need.
So 7 months ago, when we first talked about the perfect storm theory, the market was at 1.2 trillion in market cap. We had just crossed over the 1 trillion, and we were really excited about, just trying to get people into the market, trying to give people some hopium. Because if you remember, we might have some excitement right now, but 7 months ago, 9 months ago, a year ago, man, we were still just coming out of the worst bear market that we have ever seen in crypto. And it was crushing our souls. I know I was buying, even though it was difficult. I know a lot of people in this panel were buying, even though it was difficult in the bear market that we had. But now we went from 1.2 trillion in market cap 7 months ago to now 2.5 trillion in market cap. Now, remember, that episode we said a normal cycle, we could go double, minimum, right? Without institutional investors coming into the ballpark. And that would have gone from 3, because our last bull cycle, 3 trillion was the highest we went. So we would say, okay, maybe we go to 6 trillion without institutional investors this bull cycle. Now, we're only at 2.5, right? So we're still more than double away from our previous high. We almost need a 3x from here, right? 2.5x from here to get to our previous all-time high in market cap for the overall crypto space. That's not counting all of the money, the billions and trillions just piling in through these institutional investors. So we have quite a few of institutions that have launched Bitcoin spot ETFs. So we know that there's been a huge uprising in Bitcoin, and that's part of the driver, right? We always talk about pullbacks, and Jay talked about it, and I talked about it on a couple of our emergency streams. If you're in our Telegram, maybe you saw them. We did do one emergency stream on YouTube, but we do quite a few in our Telegram chat, and we talked about this. We talked about the amount of pullbacks that we've had on this run have been very small and essentially few and far in between, right? It's crazy how much has happened because of the institutional investors. And we just got 2 new institutions saying that they launched spot ETFs, Wells Fargo, right? Merrill Lynch. So that's another almost 3 trillion in market cap. I think 3.5 trillion maybe between those 2 assets under management between those 2 institutions. And we now have a question mark. Now that our friend Timmy is leaving Vanguard, is Vanguard going to start to offer a Bitcoin spot ETF? That is a curious thing to note, because that would add another 2.7 trillion institution of assets under management. Of course, right, they're not going to put all that into Bitcoin, but what if they put in 1% or 3% or 5%, right? We're talking about a lot more money funneling into Bitcoin from these institutions. We also just heard, I believe it was BlackRock, someone can correct me if I'm wrong, just launched a Bitcoin spot ETF in Brazil, right? So we're now starting to see institutions launch Bitcoin spot ETFs outside of just the United States. Yes, we might have the most assets under management here in the United States for these companies, but there are a lot of institutions. We know there are other countries that you can buy Bitcoin spot ETFs. And as the big boys start to move into it, these big institutions, the small guys are going to follow. Other countries are going to follow. Do we have another scenario this cycle where we have another El Salvador or another couple countries, coming in and saying, you know what, we want Bitcoin to be national currency on top of our current fiat currency to help to stabilize? And what happened with El Salvador? Well, people were laughing at them as Bitcoin crashed. And what's happening now? Man, they're getting their revenge. They are getting their revenge, and it is a great thing to see. So, panel, how have these spot ETFs affected our ability to push the market upward sort of faster than anticipated? And can these spot ETFs and these institutions help push us up higher this bull market, right? Maybe we said we would have gotten to 6 to 8 trillion in market cap. Well, can this institutional money help us get, as one part of the perfect storm theory, can these help to push us towards that 10, 15 trillion plus market cap for the overall crypto community? So I want to hear your thoughts on the institutional money coming in and how it's affecting the markets now and for the rest of the bull run.
Yeah, so what we're seeing now, we're seeing money coming in that wasn't available in cycles in the past. So to understand how Bitcoin and cryptocurrency and pretty much any stock or anything like that moves in price, you have to understand momentum. And the more and more valuable something becomes, the more and more momentum is needed in order to push that coin, that stock, that commodity, whatever you're talking about. It needs more energy, more capital coming in behind it in order to increase that. And So that's why it was so easy from Bitcoin's inception and from most of the, when you think of altcoins and you think of the low market cap and the low price that they have, that's why it's so easy to push the price up on these things. But once you get to a certain point, it requires a tremendous more amount of capital. And in the past, when we didn't have this sort of institutional money, it required a lot more retail investment coming in. And that momentum was a lot more slower to accomplish. If you've ever been driving around town and you pull up beside a tractor trailer, if a tractor trailer is pulling an 80,000 pound trailer behind it, then it's going to have to start in first gear and it's going to have to get up through the gears in order to get up to speed. That's what we saw in cycles prior. What we see now is if you pull up behind a tractor trailer that doesn't even have a trailer attached to it, it can start in fifth gear and it can accelerate at the same speed as most cars and trucks on the highway. So it's the amount of force, the amount of new capital being brought in by institutions that is allowing Bitcoin to more quickly get up to levels that would normally take another 6 to 9 months of momentum to accomplish. So absolutely. And we're seeing that. What we're also seeing more is a more steady increase of buying. That's what we're seeing. We're not seeing as much sell-off. We're seeing more and more steady buying, which wasn't around in cycles past. So absolutely, this money can sort of act like an explosion device, or, if you think of a capsule underneath a rocket, it can certainly act on that because there is so much more money coming into the system right now to make it a lot easier to push that momentum to increase the price of Bitcoin. That's my thoughts. I'm curious what everyone else thinks.
I want before everyone jumps in, I want to mention something you said, Josh. You said that there's a lot of buying pressure, not a lot of selling pressure. We talk about this in a lot of episodes, and Jay talks about this a lot too. Don't sell your bags to the institutions. The people that are selling are you, not them. They're not selling yet, okay? So you're selling, they're buying your Bitcoin, and you don't have it anymore as the price goes up, okay? So let's be a little bit more careful, perma bears, about selling your Bitcoin to these institutions, because they're going to continue to buy right now. Sorry.
No worries, bro. Because look, while everybody was selling at 38.5K, you know what BlackRock has done? In a span of less than 2 months, BlackRock has now matched MicroStrategy's purse. They are now about 200,000 Bitcoin each. So, like being mentioned, while everybody was selling, they were selling into the bags of these large asset managers. Grayscale has about like 500,000 Bitcoin. So they're not selling. If you're selling, you're falling for the trap. You have activated that trap card. You've fallen into the trap hole. So yeah, take heed. Observe follow the leaders. What are they doing? Are they scared? Are they dumping their bags? Or are they promoting more of their ETFs? All right. If Larry Fink did not believe in this product, he would not be out here making the rounds talking about the spot ETFs. He would not be out here making the rounds talking about the Ethereum ETFs, right? And you would certainly see that reflected on what they are buying. Look, I'm not saying that don't listen to what they say, but I am saying look at what their actions are first, because people act out their beliefs, okay? And Larry Fink certainly is acting out his belief.
100%, Jay. Actually, Brendan, I want to kind of go back a little bit to something you said about how there's not much selling pressure. Something you're forgetting about is Mt. Gox. They're selling, as well as FTX now. FTX has all of their selling pressure as well. And there's one other I'm forgetting right now that has, was it the Grayscale?
That was it, Nate. It was FTX. So the FTX estate, it was Grayscale, and then obviously everybody's worrying about Mt. Gox as well.
Mt. Gox, yep. So that is selling pressure. However, originally what we were talking about with the perfect storm theory is that basically what's going to end up happening is these ETFs are going to buy up what they're selling, right? And so it's kind of just going to kind of sit there. But hilariously enough, it's actually been buying faster than these guys are able to sell off. And so we've been going up really fast. So yeah, no, I just wanted to go ahead and point that out. Just there is selling pressure, that is for sure.
Nate, real quick, bro, because you mentioned it, very good point. So I have some data here on my phone. Nate is correct. They are buying faster than they can sell. Here's the thing. So the new Bitcoin produced by miners per week, averaging about 6,160. The amount purchased by the ETFs per week, 30,029 Bitcoin. So, yeah, Nate hit it right on the head, man. They are buying faster than they can make it, and they are buying faster than they can sell it.
I've also got something else to say about, and I have a little bit of an issue because, like Jay, I agree with you, and I have an issue with people selling into the institution's bags. The reason why, what's the number one issue I've got right now with the institutions coming in? They can't control Bitcoin, but they can control Bitcoin. Okay, so how do you control something you can't control? You put a fence around it. I've been saying this for a whole year now, right? They're putting a fence around it. People are selling at 38K, right? They're selling at 42K. And then BlackRock and all these other institutions are like, give it to me, give it to me. And you know what they're doing with it? They're holding it. They're going to hold it. And then they're going to be like, oh, by the way, did you want this Bitcoin that you used to have in your own wallet? Here you go. Here's a piece of paper that, and I'm holding it in my wallet. And here you go. You get a piece of paper that says it's yours now. Like,
I got a little pushback for you, Nate. I don't think that it matters who's buying it, personally. I don't think it matters if the origin address is buying up the hex or if the market is buying up the hex. I'm personally a little bit more fond of these, like from a price perspective, not necessarily from a freedom and sovereignty of the coin perspective. When I see BlackRock buying a bunch of Bitcoin, I don't think they're going to sell it anytime in the near future, quite so much as paper hands, lettuce hands person who's like just taken out, a $50,000 loan against his house or something to buy some Bitcoin for a short-term pump is. So I see them buying the coins as like, I don't know if bullish is the right word, but I think it's a good move because when these big giant financial institutions buy the coin, yeah, they get more control of it, but they're pumping our bags. So that's my thoughts on it. I think it's good.
We're always going to have the sell pressure, right? Especially when you have to look over the last 2-year period. Okay, as miners have been mining more and more Bitcoin, you got to think of the inflation rates and all that stuff. Think about in 2022 when inflation really started to take off. What was the price of Bitcoin? Where was it at? It was in the 20s going down into the teens. You know what I'm saying? So now miners are actually in a situation where they're actually able to turn a profit over the last year and a half on the Bitcoin that they've been mining. So there is going to be a steady sell pressure. But what the ETF and the institutional money is doing right now is it's acting as a vacuum to suck it all up. And that's why you have seen not only the market cap 2x, but when did we do our original stream? I know it was in 2023. Was it in August? Was it in July?
I believe.
Okay, if it was in August, the price in August was $25,000 for Bitcoin, right? And we're over 60,000 right now. So Bitcoin has already over 2x'd since we put out this information the first time. So, there's always going to be that sell pressure, especially now. Miners are going to take advantage of the opportunity. However, you do have the institutional money that wasn't around in cycles past. That is just sucking up that's sucking up that available Bitcoin more and more and more. How long did it take MicroStrategies to accumulate the amount of Bitcoin that they have? Michael Saylor has been buying Bitcoin since the last cycle. All right. And look how fast BlackRock has already accumulated the same amount. Think of that. All right. That is pretty much, 2.5, 3 years of MicroStrategies buying it up. And within a matter of 2 months, BlackRock did the exact same amount. That is how much buy pressure is in the market right now. And it's interesting to think if Grayscale wasn't selling off, where the price would be right now, what it would look like. Because that very well could be what happens for an Ethereum ETF if an Ethereum ETF gets approved. Something to think about. But I know we're talking about Bitcoin right now, so I want to keep it on that topic.
Yeah, actually, no, this is a perfect segue. Actually, thank you for saying that. So right now, right, it's about the Bitcoin ETFs. everybody for as far as like the financial advisors, actual financial advice, right? For the large institutions have said there's right around anywhere from 10 to 15 trillion dollars worth that is going to be flowing into Bitcoin. Well, I can tell you right now that that's not going to be enough. They're not going to put all of that money into Bitcoin alone. It's going to start flowing. And what is the flow chart, right? The flow chart is Bitcoin and then Ethereum, and then it goes down into other alts. And the other alts actually is is a little bit further off, but it's a part of the perfect storm theory that we have. Basically, I was kind of referencing down like index funds or mutual funds type of deal, right? In which currently right now, I've got a list of Matic, Sol, AVAX, Base, and Link seems to be like those alternate coins that they would kind of like spread around as like, oh, we have a bunch of these, right? But first things first, we need the Bitcoin spot ETF. Done. Okay, cool. We got it. Number 2, we're gonna need the Ethereum spot ETF. All right. And I almost want to say that there's possibly a Solana spot ETF, and that's when they'll start diversifying, right? That's when everything kind of like goes out. Now, that's just speculation. We're gonna hold it there. But as of right now, what are they doing, right? With the Ethereum ETFs, they're sitting, the SEC is like kicking the can down the road again, exactly as they did with Bitcoin, right? And yet Ethereum's doing this. It just keeps going up, right? So guys, be prepared for the launch to be a sell the news event. Just saying. But yeah, no, there's a lot of money here. The total market cap is not going to be like, 16, 18 trillion dollars in Bitcoin alone, right? Or like, 10 trillion or 15 trillion of that being in Bitcoin alone. It's going to move down. It's going to move down. So there's a huge alt season coming. And Brendan, if you want to take it away.
Yeah, well, you mentioned Ethereum and a couple of things. So we're going to talk a little bit about some interesting price predictions. I think for our channel, for the most part, we've been fairly conservative on our estimates for Bitcoin this cycle. I think we tend to have a pretty varied view because there's a lot of us a part of the Degen Roundtable. But I think overall we tend to try to be conservative so people don't get a crazy head and wait for something to come that doesn't happen. But I know for myself, I'm getting more and more bullish on higher levels of Bitcoin this cycle than I had previously anticipated. So my previous thoughts were like 80 to 120K. Like that was my range. You might be, I'll tell you later, but my range might be starting at 120,000 now as the minimum high point for Bitcoin. And it goes up as a potential much higher than that now. And we're going to get into a couple other people that think that as well. And we've seen a lot more talk about it in the past couple of weeks of maybe Bitcoin hitting 200,000 plus. So this institutional money coming in is huge. It also is going to make retail investors come in later in the cycle. Retail investors tend to wait longer to get in. I don't know why, but retail investors love to buy tops. So, when your friends and family start buying Bitcoin, it might be the time to get out. But we've been telling you, buy now, buy previously. Again, not financial advice. It's really up to you. You're going to make that decision to hit the buy. You're going to make that decision to hit the sell. And you're going to do your own research. But I'm pretty bullish. I'm pretty bullish on this cycle. So Bitcoin spot ETF, not only did it happen, but it happened exactly the way that we played it out. We said Bitcoin spot ETF is going to happen at some point. We said it was a when, not if. We know it got approved. Now, Bitcoin dominance at that time was 51%. I'm going to share my screen quickly and show you something.
And while you're doing that, Bean, did we?
Yeah.
Do you remember if we were saying in majority that it would be approved basically at the final approval date? We said that, right?
I mean that's what I said. I don't remember exactly. I listened to that whole episode.
I can't remember exactly either. I think it was though. I think it was, and it ended up being
second in that episode. I think it was a different episode, to be honest with you.
Okay.
Yeah, good question though. If you could pull up my screen, that would be great. Let me know when you can see it.
Yeah, you're good, bro.
You good, brother?
So we talked about the Bitcoin spot ETF having money inflow. Now, last cycle, Bitcoin topped off at like 63, 64%. So if we go to all time here, you can see, like, look at back here in 2017, like Bitcoin is just 2020, 66%. Okay, so actually it hit 70% at one point. So we still have a possibility of seeing Bitcoin later this year after the dump, after a potential dump, and then as we go giga rise, Bitcoin's dominance will continue to increase. Maybe it touches 60%. I don't think it will get as high as it did last cycle for a few reasons. First of all, we have a potential Ethereum ETF around the corner, right? So that's going to put a lot more money into Ethereum, and it might even out that Bitcoin dominance. But we did mention that Bitcoin dominance would start to increase once the ETF launched. And you can see we were low here, about 40%, and we're at 54%. So steady increase in Bitcoin dominance. And this is important to look at because what happens? Money funnels into Bitcoin, then money funnels into Ethereum, and then money funnels into alts, right? Now, I think people are front running alts a little bit more this cycle than past cycles just because they're excited and the markets have happened a bit more, and the meme game is really strong this part of the bull cycle. And I think towards the end of the bull cycle, of course, we're going to get really strong pressure as we move into alts. But I did just want to show you this Bitcoin dominance. Can I switch to a different, can you see that screen? I just switched tabs. Can you guys see that tab?
Mrs. Producer will have to switch you over manually, brother.
Okay. If you could switch me over on that, let me know when you can see it.
By the way, what's wild about this chart right here is you can see where Ethereum basically started and then just dips.
Yeah.
It's crazy.
Can you see it? Can you see my screen?
Not yet. Not yet.
Okay. Well, that's all right. I'll come back.
You have to take it off entirely and then
I used to be able to go from one to another. So maybe
it's StreamYard.
Yeah, it's StreamYard, bro. We used to have that nice feature.
So Josh, before I share that, I actually want to share something that you posted. And before we get into the Ethereum ETF, you had sent out a tweet back in December 24th, a little Christmas Eve nugget. And you had said that there's a possibility that Bitcoin could hit $250,000. All right, I just shared that, so that should come up soon. Let me know when you can see it. Why did you say that? And I'm starting to hear a lot more rumblings about this 240,000 number. And you kind of talked about it a lot before other people mentioned it. So I want to hear your thoughts. Why that number? How'd you come up with that number? And just take us through what you were thinking.
Yeah, so what I'll do, go ahead, and if you want to stop sharing screen, I can go ahead and pull up mine, and I guess I'll just walk you guys through sort of the process that I used. It's really, when I did it, it came down to, hang on, let me find the screen that I'm going to share here.
This is brilliant, by the way. Everybody listen up.
Yeah, it's so really what it is. I mean, you guys have to understand markets, okay? Markets is pretty much human behavior. That's pretty much all markets are, is that they are human behavior. So if you can plot and you can understand human behavior, and you have something like Bitcoin that has, Bitcoin is predicated on the halving period, okay? And that's why we see parabolic moves on Bitcoin every single cycle after it halves, okay? It's a simple supply and demand concept. And every single time Bitcoin halves its supply, the demand is automatically going to increase, all right? Because there's only half of Bitcoin that is being mined at that point. So it's simple supply and demand. So what I did, knowing that there's a four-year cycle, I went back, and what I simply did, I started here. You guys can see the chart here, correct?
Yes, sir.
All right, cool. So what we do know, I took a couple things into mind here, okay? Most four-year cycles, they rhyme. They're not identical, but they're rhyme. You can see a lot of different things playing out in similar patterns. All right, so that's all I did. And a little bit before this, in September of 2022, when Bitcoin was around $40,000 and decreasing, I used this exact strategy that I did here, and I surmised that the Bitcoin bottom would occur between October and December between $17,000 and $13,000, and it landed up at 15,700. So that's all it was. It was just simple finding the trends in the overall price actions and just looking to see what was available within that pattern. So what I did here is I took the cycle high back here in 2013. All right, and this purple line right here, this is the low for that cycle. So I wanted to find out, hey, how long did it take before Bitcoin from this period hit its all-time high again? All right, so it took 1,180 days. All right, for Bitcoin to top, go through its bottom, and then to find that previous all-time high price again. And then what I did is I determined, okay, so from that time to reach all-time high, how long does it take to get to a new all-time high? For this period, it was 290 days. So I repeated the same process for here. Okay, so I looked at this and I said, okay, 1,080 days. So it was a little bit shorter of a time frame. Okay, and I did the same thing. It took a little bit longer for that top to happen because we had the double top. So all I simply did, all right, I took the exact same strategy. So I used between 1,080 and 11,000 and 1,180. I used that. And I found the trend, the macro trend that we're observing right now, which, give me one quick second here. Let me find it. Okay, so as you can see, we bottomed down here. We came up, and then we bottomed again, and now we're starting to come up again. Okay, so this is the upper channel. This is the lower channel. This is where price has been acting in between throughout that entire period. So all I did was I ran a bottom trend and an upper trend, and I ran those dates. All right. And what it came out to, obviously, we could very well reach the all-time high prior to this. But when I originally did this in December, if my consensus was, if we stuck to a typical 4-year right translated cycle, like cycles in the past, what we could see is the all-time high of $69,000 being reached between October and February. All right. And then the new all-time high could be between $140,000 to $240,000. And that's just taking everything that is, the moves and the patterns and the amount of time that has transitioned in the past, applying it to this cycle, giving a little bit of leeway, and this is how it comes up. And what's interesting is if you look at the macro upper and lower bands for previous cycles, if you look over here at 2017, all right, so this is a 2017 time right here. What we see, and this is why I say every time I look at this chart, it's looking identical almost. As you can see, we touched that upper pattern 2 times before we even get to the all-time high. All right, over here, last cycle, it came up 1 time, and that was it because we had the COVID dip. The next time it came up, that's when it that's when it reached the all-time high, and it ran again. But if you can see here, it touched it 2 times, came back down, and ran up. Now, what's interesting now, what we have now versus what we had back in 2017, is we do have that increase in institutional money coming in, a lot more institutional money, a lot faster. So that is a very strong reason why I believe that this move to the all-time high is occurring a lot faster than where it was right here. One other thing that I wanted to point out is if you take a look, okay, let's take a look at just the macro RSI behavior over the last 2 cycles. All right. This is 2017. If you can see in June of 2016, it touched this upper green band of overvalue, and then it continued to touch it a couple more times before it blew off. All right. If we look over here, last cycle, we didn't see that activity. And then when it finally broke into that green, that was the technical top. That wasn't even the all-time high top. So this technical top happened in January, that early 2021 time frame, and then we saw the distribution top roll over and continue into November. What's interesting is if we take a look here, so from this first dip last cycle, all right, which we would be right here. So if we take this look, we take a look here, It increased about 50%. Okay. And then we had the COVID crash. All right. And then it came down about 45%. Well, I asked myself, what if that flipped? What if that COVID never happened and that negative was actually supposed to go up, like happened over here? Does anybody know what 50 plus 45 equals? 95, right? Take a look at this. Take a look at that right there. I have a strong suspicion that the activity that we are seeing right now should have occurred last year. Okay. But it didn't happen because of the COVID dip. And I feel like with the institutional money that we have in place right now, acting as an explosion device to blast it forward, what we saw in 2017 is possible to happen this cycle plus more because we have that extra money. So that's how I came to that conclusion. Hopefully you guys were able to follow along with that analysis and all that stuff.
No, that's mind-blowing, bro. My question then is, last cycle, do you think that was a muted cycle? And because it was a muted cycle, are you seeing that the technical muted cycle of what happened last cycle is now can basically be just kind of like copied over to the amount of gains to this cycle?
I think when COVID happened last year, it threw a wrench into the system and it muted the entire cycle. And I think part of the reason that we went through the staggering bear market that we went through was to reset. I think it had to reset. And that's why it lasted the amount of time and the debt and the drop specifically around Bitcoin that it had to happen. And now we're at a period where it's reset. We're fresh. We're ready. Let's rock and roll. And, sitting in the bar with Brendan, we were talking about this. We were like, man, we got institutional money that might be coming in. We have just a lot more bullish momentum coming into this thing. There's a whole lot more hype. There's more and more talk on crypto Twitter. Things are happening a lot faster. What could happen here? And, I think this is kind of coming to bear out. So,
so if we are looking at those gains then with Bitcoin, if we are looking at those from last cycle, does that technically mean that we'd be hitting right around 240,000 like this cycle then? If like we just kind of copied those over?
You guys can I can answer that real quick. I just have to, or if me and Jay can answer that, and if Zenith wants to run an indicator also, so we can find some confluence. But if you don't want to keep the conversation, I'll answer it.
Let's keep going for now. So, Josh, you put that out in December. Cass, if you could bring up this tweet from Mr. Richard Hart himself, just this past week. Very interesting stuff from Richard. Once that gets up, I'll break the news. So what do we see here? What do we see here? Interesting. Mr. Hart is starting to consider the possibility that Bitcoin could be in that 240,000 range this cycle. Very, very interesting. Now, he's not the only one that big finance guys that has talked about that. Skybridge Capital, for those of you who know it, the founder there, Anthony Scaramucci, said that if Bitcoin is at 35,000, at 50,000 after the halving in April, then he's expecting $200,000 Bitcoin for this cycle. Then he said, if it's at 60,000, we'll see a number of 240,000. So both Richard Hart and Anthony Scaramucci from Skybridge Capital are talking about the potential for Bitcoin to hit that 240,000 number as well. We're starting to see a lot more of these higher numbers than originally anticipated. And I think that is because what we're talking about, the amount of institutional money that's coming in and the amount of people that don't want to sell. MicroStrategy just bought another, 300 Bitcoin or something last week. And Michael says, yes, I'm going to continue to buy the top because Bitcoin is our exit strategy. I'm not taking profits from Bitcoin. That's what I'm holding forever. And until that man does something other than buy Bitcoin, I got to take him at his word. So Richard Hart thinks that even if Bitcoin hits 240,000, that his coins are going to do even better this cycle. And he said another tweet this week, the only way that you can predict the future is to build it. And that's the same week that the OA address, the SAC address, started to put some DAI into stability pools and earn 5 to 7% yield. 200 million DAI to be exact. Bridged 30-something million into Pulse Chain, bought some 10K bump. So I'm just saying there's some serious hopium for the Richard Hart ecosystem this cycle as well. ETH ETFs. Zenith, what do you have to say? We getting an ETH ETF by the end of the year? We getting it in May, or are we getting it at some point?
Based on everything going on right now, all indicators point towards us getting an Ethereum ETF. And if you follow the deadlines that are on the paper right now, it looks like May is the month for it. So this is following a very similar situation to the way that the Bitcoin ETFs happened based on the Grayscale court ruling that came out, which is Grayscale argued to the courts that there already are futures ETFs in place. Our Bitcoin ETF follows exactly the same thing, same security, same performance. Therefore, it should be approved. And then we saw very soon after that, it got approved. Ethereum ETFs, we already have Ethereum futures ETFs. They're on the market as we speak right now. So assuming that the Ethereum spot ETFs, same structure, same security measures, same performance with regards to spot versus actual Ethereum, it's very likely, in my opinion, that we see the Ethereum ETFs get approved here in May.
So, panel, two things. First of all, ETH ETF. We now have another layer of the perfect storm theory coming into play, right? Now, our first perfect storm theory, we only talked about Bitcoin and Ethereum spot ETFs. What I hadn't even anticipated is this cycle, could we see, I have a couple questions. First, I'll ask this one. When the ETH ETF, if or when it gets approved, BlackRock CEO says it's a matter of, Grayscale CEO says it's a matter of when, not if. What happens when the ETH ETF gets approved? Do you think a lot of the money from the Bitcoin ETF that people might take profits and put that into Ethereum, or are we going to get a dish, or I'm sure some of that will happen. But overall, do you think we're going to get more of the percentage of these institutions into the market so that they have a chunk of Bitcoin and a chunk of Ethereum? And so this drags the price of both coins up again because more institutional money is coming into the overall crypto space. How do you guys see the Ethereum ETF affecting the market?
I think, look, we've already seen exactly what the Bitcoin ETFs are capable of, right? They are blowing records left and right. It's funny because our favorite uncle, Mr. Peter Schiff, posted on X the other day about how CNBC seems to be so preoccupied with the Bitcoin ETFs that they fail to realize that gold went up by like 26%. So, but the reason why nobody cares about gold, Mr. Peter Schiff, is because everybody's seeing the massive gains of Bitcoin, and all of the different asset managers continue to accumulate regardless of how high the price goes up, right? So there's already there is already an established demand, right, from retail through the ETFs that we've seen with Bitcoin. So can the ETH ETFs potentially move the price to those 240,000 levels that Josh and Richard Hart were talking about? Absolutely. Because now, what you have to realize is that now there isn't as much uncertainty around whether it will be approved or not, right? I think we can all say with a reasonable degree of accuracy and precision that unless the SEC wants to go through another extended litigation with companies like Grayscale and Coinbase about getting these types of things approved, specifically the ETH ETF, they are going to have to shift their game plan. And that it doesn't seem likely to happen to me. So if they do decide to postpone it, they're going to have to go to court. They're going to have to come up with a new game plan. They're not going to do that. And so inevitably, it's just going to get approved just like the Bitcoin ETFs were, right? But because we already had those approvals, there isn't as much certainty. So there isn't as much uncertainty within the market of whether the ETH ETFs are going to be approved or not, right? Which is why you have folks like Brendan alluded to him earlier, right? Grayscale CEO, Michael Sonnenschein. He was on Squawk Box the other day talking about how his clients, right, both the big VCs and the retail clients that they service, right, are telling him, look, we're excited about the gains we're making with Bitcoin. When Ethereum? And not only that, he was on that show talking about how his clients are now taking a sector-based approach to their investments within crypto. So before, when nothing was approved, people were hesitant, right? Because obviously of all the litigation that had been ongoing and the just brutal bear market that the space has had to undergo. But that uncertainty is not there anymore, right? So you instead of a headwind, now you have a very big tailwind that could potentially push this market to those parabolic $250,000 levels for Bitcoin when the ETH one gets approved. So, like you said, it's not a matter of if, it's a matter of when. I don't think the SEC, I don't think they have a prayer to win in court if they decide to postpone this. I foresee another arbitrary and capricious judgment by if it's Annalisa Torres again. That's what she'll say.
Thank you, Jay. Josh, you got something?
Absolutely. Brendan, you want a little bit of hopium?
Yes, buddy.
Nate, you want a little bit of hopium?
Yeah, shoot me up, man. Let's go.
All right. So in 2015, when Bitcoin bottomed, the price of Bitcoin was $153. Okay. A year and a half to 2 years later, at the end of 2017, Bitcoin tops out at $20,000. That is a 126x. Okay. In November, December of 2022, Bitcoin found its bottom at $15,700. All right. A 126x from that point is $201,000. So what does that tell you? That tells you that the analysis that I did and the number that Richard Hart put on his Twitter says that he thinks that this cycle can perform at or greater than what happened in 2017. What I also want you guys to keep in mind is this. What happened in the 2017 cycle? What revolutionary coin made a debut? It was Ethereum. Ethereum opened at 16 cents, and at the end of 2017, it sold for $1,300. That right there, my friends, is over 100,000% increase. Okay? So what do you guys think could happen if a brand new L1 ecosystem came out this cycle that was revolutionary? What do you guys think is possible? If Bitcoin can perform like it did in 2017, what do you think can happen with the new revolutionary coin that can change the game for cycles to come?
I don't know. That sounds like a 10,000x to me. I don't know. Somewhere in that area.
I don't know, Nate. Some people might tell you that it's only capable of 100x.
Maybe. You know what? 100x, 10,000x, I wouldn't be disappointed with either, but I like the sound of thousands better than hundreds. Pulse Chain, PulseX, Hex, Inc. Inc. being kind of a meme coin. In fact, Richard Hart said today that Inc. is the best meme coin in his ecosystem, and it's just freaking flashed this week. Yes, great point, Zenith. Thank you for putting that in there. So, yeah, so we have a potential for a much larger cycle, almost like a mini super cycle. Now, the super cycle that I'm saying is mean that we'll have an extended cycle, but we're going to be higher than we would in a normal cycle because one of these reasons is the institutional money coming in. So that doesn't mean that we're going straight up from here, right? We're not going from 60,000 to 240 if that's what we get. And we're not saying that's going to happen, right? We're saying that's a scenario that we're keeping our eye on, right? There are other bearish scenarios that we're also keeping our eye on, but today we're focusing on some bullish scenarios, my friends. So let's keep the hopium here. Nate, you got something quick to say?
Yeah, keeping the hopium going. So let's go ahead and dive a little deeper into that, right? Now, you know that the flows of all the money technically goes from Bitcoin to Ethereum to alts, right? And then it's like high cap alts to lower cap alts, right? Okay, let's go ahead and take exactly what Josh has been saying here, okay? So Bitcoin is going up. Bitcoin has all the ETFs and it's doing its thing, okay? Now we have an Ethereum ETF. All right. So if Bitcoin ETF does what it does, you can bet your biscuits that the Ethereum ETF is going to do kind of the same thing, because what these institutions do that are market makers and that are able to move the market however they want to, they do what's safe, and what is safe is what Bitcoin has already been doing. Congratulations, you told us exactly what you're going to do, and so they're going to copy it over for Ethereum. Now, what is connected to Ethereum? Whatever is paired with Ethereum is, if as Ethereum goes up, it's dragging everything else with it. Okay, that's why the money goes from Bitcoin, Ethereum, everything drags up, and then even more. Then it goes even further into alts, and alts, take off. That's the reason why, because of the pairings. All right, now you're looking at the pairings. All right, you've got this L1 called Pulse Chain, right? And you've got a billionaire, a supposed billionaire, who has the largest holder of DAI, plus it is using that DAI, by the way, to siphon off Ethereum's money supply directly to Pulse Chain. Plus, then he's one of the largest holders of Ethereum and Bitcoin as well, because he was originally he was one of the original miners of Bitcoin. Okay, so what does this all equal out to? Whatever is happening with Bitcoin and Ethereum going sky high is directly correlating with exactly what's on Pulse Chain right now. That's why it's kind of lagging a little bit, and why you have the opportunity to buy in cheap right now. And you guys know that I've been saying cheap, buy cheap. So if you're seeing all this happening, right, and on top of it with May, okay, what's going to happen in May more than likely?
Nate, hold that thought.
You want me to hold it?
I want you to hold that thought.
All right, I'll hold it.
Because we're
too much opium, overloading.
We're getting into that, but I want to touch on the Fed, because that's going to roll in. That's going to roll into that topic. So there's two things that are happening potentially in May or June. But right now, Zenith, I want you to take point on this conversation. But we're not saying this is going right to the moon yet, right? We are expecting a potential of a pullback, which is what Nate is about to say. And one of the reasons for that is we have rate cuts coming at some point. What happens when rates are cut? You think because they're printing money that it's going to go up, but no, it's always a sell the news event. Ethereum spot ETF could be a sell the news event. These two things could happen very close to each other. Very close to each other. So what does that mean? That potentially gives us an opportunity to come down. But Zenith, talk to us about these Fed meetings coming up. Talk to us about these interest rates, what you're seeing out there.
For sure. So based on what's been going on, we have two specific points in time which Jerome Powell has talked about the future of Fed rates. The first one happened back in December of 2023. This is when they just straight up came out and said they're anticipating 3 rate cuts of probably a quarter point during 2024. Then after the January FOMC meeting, we had Jerome Powell come out and say that they weren't ready for a rate cut, and they're anticipating trying to push it off as long as the economic projections can show that. One of the reasons that they're doing this is because inflation has remained a little bit higher for longer than they expected. Therefore, keeping interest rates high is going to help squeeze out the last little bit of inflation that they're hoping to get. Again, the target rate is always 2% inflation. However, in reality, it's usually a lot higher than the numbers always suggest. And lately, we've been floating anywhere between 3 and 4%. So still well above that 2% point. Anyways, if you go to the CME Group website, this is a projection or a probability calculator for what is going to be happening. If you go and look at the March Fed rate probabilities, it's at 95% no cut. This is based off market sentiment, including futures, as well as a little bit of like social media and professional knowledge built in. But as far as March goes, a lot of people were anticipating that rate cut back when we had the first bit of news from Jerome Powell. Right now, the market is betting that we're going to stay right where we are, which is 5.25% to 5.5%. Then we get to the May Fed meeting. Now, this is the one where people start to think that it's a little bit more likely. At this point, we have about a 26% chance that they actually drop a quarter point, and about 72% chance that it stays where it's at again. That again is in line with what Jerome Powell said, with the most recent statement being that the economic factors will be driving the decision on this. Therefore, since it's been pretty steady with where it's at and all the language surrounding this, it's likely that we're going to see our first rate cut in June. This is where you actually see it's the highest probability and the most likely outcome based on what the market is saying. This is where we have a quarter point rate cut at about 53% chance and about a 29% chance that is going to stay where it's at. Now, you might be noticing there's a lot of percentage points missing from here, and that's because this is where you compound in other factors like the possibility of 2 drops that we have. So 16% chance of being at 4 3/4 to 5% rate cut. That would be 2 rate cuts. So the odds on favorite is we're going to get 1 cut in June. And then there's the next best option. The next most likely option, according to this tool, is that we're still going to stay with 0 rate cuts all the way through June.
So say we start getting a rate cut in June. That's June 12th, by the way, right? June 12th is the
Yes,
meeting.
sir.
May 1st, June 12th. Those are the dates you want to look at. ETH ETF. What's the last date that the ETH ETF can be approved? Is it May 29th? Does someone know that off the top of their head?
30th, May 30th.
May 30th. I know it's right at the end of the month.
Sometime in May, I know that.
I want to say one.
That's what some of them, not all of them. So some of them, it's basically like mid.
Yeah, but if they,
because
I
there's
think
lots of
they'll do
different
the
ones.
same as a Bitcoin, right? They had one date that had to be up, and they just approved them all. So that's likely what will happen. And so let's say it's end of May. We get ETH ETF. Nate, could that be a sell the news event? Yes, I just said that. Historically, when we get rate cuts, we get a sell the news event. Zenith, yeah.
I was going to say the first of the there's that chunk of ETF deadlines. The first one is May 23rd, and then so first one is May 23rd. That is Van Eck. Then we have 21 shares the 24th. Then we have Hashdex May 30th, and then Grayscale's ETF is actually on June 18th. So that is the first chunk of ETFs that have their final deadline, like the final. This is it. There will be no pushback. That's the block that we see. So if they do follow that Bitcoin approval schedule, then mid to late May is what we're looking at.
Okay. So we're starting to see a potential pullback then. Nate, what are you thinking for pullback? Since
So put the brakes on it. It's like, all right, so yeah, kind of what I'm looking at is actually what we're going to be seeing is it's going to be a pullback on alts. Okay. And as far as an exact number, I don't have an exact number of like, this is the percentage of the pullback. That doesn't really matter, right? You don't care about exactly how much is being pulled back. All you know that it's going to drop. And I think it's going to be a larger drop than normal, simply because, like the Fed pivot and we've already seen it with the Bitcoin ETFs, which it's a sell the news event. And these institutions love it to be nice and safe because there's a lot of money involved. And so the Ethereum ETF with a 90% conviction, I could say, is more than likely going to be a sell the news event. Hence why I'm actually legitimately looking at taking out about 30% of my entire portfolio in alts on that news. So with that being said, though, I think throughout the summer then, so like from June till maybe like September is going to be a big old dip. However, I can't say that's going to be the same thing with Bitcoin. I think there's a real possibility that, oddly enough, the flow goes back into Bitcoin. And so we're going to see Bitcoin actually start to rise really high there. And so with that Bitcoin dominance going up around this time, then it's going to be like, that's when we're going to be hitting like, I don't know, maybe like 100,000 or whatever. People, getting that 100,000, bam, there it is. Yay. That number we've always been looking for. Then they're going to start yeeting it into alts. And when they start yeeting it into alts, that's when we start hitting like October into what I would call, the nuclear winter, which is going to happen. And alts are just going to, and if you're looking at the others chart, Hey, I'm the host now. But if you're looking into the others chart, which is you take out the top 10 alts, right? That includes Ethereum, and then you also take out Bitcoin. We have right around it was when I was looking at February. It was February of 2025. That's when you 3 times in a row now, you have this nuclear just straight up with all of the altcoins. Okay. So I'm thinking right around that time is when we start seeing just a nuclear blast going straight up. And it's going to be followed, or it's going to be because Bitcoin, number one, goes extremely high, right? Flows down into the ETFs of Ethereum, which just like with Bitcoin right now, and if you take a look at what Josh said earlier, right? It's actually Bitcoin's moving a little bit earlier. It's pumping a little bit earlier, most likely because of those ETFs. So that means that Ethereum is going to be going higher. And so all of our alts are going to be going higher as well as ETH, not only with the pairs, as I said, right? But also the flow starts going down as well. So this is going to be insane, absolutely crazy. And here's the crazy thing, okay? It's going to be sudden because you're going to be like, oh, my bags aren't really moving too much. They're going up a little bit, but I'm at like a 10x maximum, whatever. And you're going to have like 3 months where all of a sudden it goes from like a 10x to 100x. And you're like, what happened? And you're going to have a lot of money suddenly. So just advice for people out there. I would start looking at your bags now and thinking about, hey, if I suddenly became like super rich in 3 months, how would I hypothetically deal with that? All right. So just a little warning there. Just a little warning.
Yeah, Nate, and we will do at some point later in the bull market. We'll do a full show of off ramping and taking money. We're going to do a full show on how to get your money out and into assets that you want to hold before the market goes down. So, panel pullback. Anybody else want to touch on that? Will, anything you want to add to this?
Man, the shit you guys are talking about is so far over my head, bro. I just buy and I just hold. Like, I don't know. Like these are some great stories. Don't get me wrong, but it's like buy, hold, easy.
And that's it, right? Like we all have different plans. We all have different abilities of what we can do. So, play up to your ability at that moment. And then as you learn more, take the next step to play up to that ability, right? And this is how you get in crypto. Learn more. So, Jay, Josh, Zenith, any thoughts on that pullback before going through the summer?
Just some quick data.
Yeah, Zenith, go ahead.
All right, quick data for you. If you look at the 2016 halvening, they had about a 30% correction around that date. If you look at the 2020 halvening date, including the our Black Swan event there, that was about a 57% dip. But other than that, it honestly was very, very minimal, maybe like 15-20%. And then even going back to the 2012 halvening, there was a minimal correction. So is it possible that there is a bit of a pullback at just the halvening date? Yeah, for sure. But it's not going to be catastrophic or anything.
Yeah, and I kind of want to make a comment on the perspective of the Fed and the rate cut. You also have to keep in mind the political climate of where we're going to be in May and June. We are going to be in the middle of a full presidential cycle. Okay. And while I like to think that Jerome Powell has shown himself not to be a political pawn to the Biden administration, I will certainly say that you better believe that the Biden administration will be putting pressure on the Fed to lower interest rates. Because while it may be a sell the news event, there's still much more political capital that can be gained by Biden hitting the presidential trail saying, look, we went through inflation. We maxed out the rates. Now we're starting to cut the rates because the economy is getting better. All right. So there's that talking point that you have to look at as well. So while the Biden administration while Jerome Powell while he may not bend the knee to the Biden administration, the additional political pressure added on top of their already planned decision to cut those rates will make it a little bit easier for those rate cuts to occur within that time frame.
Fair point. Jay?
Based on what we're seeing now, I think the lowest we could possibly go, 48.5, and for I think a more muted dip, probably around 55,000. But those are based on the technicals that I'm looking at now, right? So if Bitcoin keeps running, those targets will increase. So if we were to somehow, if this was it, this was the top of our current 6-day cycle, then those will be my targets. But if this keeps running, they'll move up. So
yeah, great points, panel. Josh, that alpha you dropped on your potential for 250,000 Bitcoin, great stuff. One thing I want
to can I just say something to that real quick? It's a path, right? There's nothing saying that that's what's going to happen. It's just a potential path. Yeah, it's a scenario, and that's all I was saying. It's not saying that it's stuck in stone that that's going to happen, that it's going to follow that trajectory, because we all know that Bitcoin does a parabolic move typically, usually 3 to 6 months after the halving. That's when it starts. Now, if we're going to be in a left translated cycle, which that's another topic for another day, then we're already in the middle of that parabolic move right now. But if it sticks to the normal right translated 4-year cycle, then taking that parabolic move aside, those are at least some trends that you could look at in upper and lower bands that it could go to.
Yep. Understand. And look, again, we're just giving some opinions of things we're seeing, not financial advice. You hit the buy or sell button. We don't. Okay. Zenith said was 30% pullback last halving. That wasn't institutional money, right? So now that we have institutional money, we've kind of been seeing more muted pullbacks as Bitcoin has gone up fairly exponentially over the past couple of months. And I think that's a possibility too. We might get less of a pullback than we have in previous cycles because of institutional money and because of more excitement coming into the market. So we could see that 30% pullback, sure, right? Or it could be smaller. But the point is, there's going to be a pullback, and it might be the last time for a few months that you're able to buy before we go parabolic. So, not saying to buy. You make that decision for yourself. I'm just saying it might be the last decent sized pullback before we strap in.
And really, we're due for a correction, because where the macro level RSI is right now, if we want to maintain the 4-year right translated cycle narrative, if we want to stay on that track, we're going to need a pretty decent pullback here relatively soon. Because if it doesn't happen and it continues to stay green and this momentum continues to build, the narrative might be shifting a little bit as far as what might happen.
Yeah, and I'm not a technical analysis guy, but just looking back in history, generally when we have 6 straight months of green candles for Bitcoin, there's generally at the very minimum 2 red months. However, you know where I'm going with this. All right, so if we have 2 straight months of red candles, where does that land us? May? Uh-oh. So it looks like that idea of the alts moving back into Bitcoin because of pullbacks might be shaping up. Just saying.
Yes. Anybody got anything else on that topic? I think it's an important one. So we also could have that 30% pullback because we have 2 things happening, right? Potential rate cuts and potential ETF launch. But we'll see. We will see.
Cross that bridge when we get there, man.
Exactly. We're just giving you the information of what we have now, which, by the way, is much better than what we gave you 7 months ago, because the picture is more clear than it was 7 months ago, and it's going to be more clear a few months from now. And so we're going to continue to update you. So continue to watch the show. We're going to tell you if the perfect storm theory continues to look like a possibility, or if it's looking like we are not going to be moving in that direction. So, just like amazing. I love it. I'm excited.
Brendan, if you don't mind, I do want to put a not financial advice out there. I know I've been saying that I'm going to take out like 30% of my entire portfolio because of this move. I have not confirmed and decided I am going to do that. The reason being is I want to watch it play out first. Okay, guys? So don't be like, oh, this is the move, I'm going to do it now because I said so. Not financial advice. I'm watching right now. This is my plan as of currently. This is plan A. Okay, but it's not plan B, it's not plan C. Plan A is I'm just watching the market. Okay, so not financial advice.
And 3 to 4 months from now, we're going to be in a lot better position to be able to determine whether,
Yeah.
all right, maybe we need to start looking at a left translated narrative, or hey, no, you know what, the 4-year cycle is still intact. Like these, so around the time these rate cuts are proposably going to be coming out, we should have a much better picture. So we're still a little too early.
Yeah, and that last show 7 months ago, by the way, that was our 4th episode. I could just hear the polish in each and every one of you, how much we've improved.
You damn right.
That show. I went back and I listened to that show, and listening to it on 1.5x is great because it makes it sound like we're talking perfectly normal, but there's so many pauses and all of these little things that I just don't hear as much in the current shows. And anything that you do, you're going to improve at the more that you do it. So keep practicing crypto, right? Keep practicing, get better, because we are a testament in the crypto market and also in the content creation space that practice does make a big difference. So hopefully the content that you're seeing is even better than what we produced 7 months ago, and hopefully what we produce 7 months from now is even better than this. So another thing that we touched on then was government regulation. Well, we don't have any government regulation. We're not going to see probably any government regulation for a while yet, probably till after the elections. However, we have seen something, and that is the SEC taking loss after loss after loss in court. They were taking L's up the wazoo. I don't know how Gary Gensler still has a job because he's not doing it well, unless maybe he's just a pawn, and that's the whole game, right? So I don't know what to tell you, but the SEC taking losses in court makes for a bigger bullish case for Bitcoin and the crypto market as a whole, does it not?
Yeah. And here's the thing, Bean. So yes, I don't expect to have any solid regulation in place until after the election, but we can always look towards other nations and the rest of the world for insight, right? We spoke about this a few weeks ago, but the rest of the world is not waiting for the United States to come up with regulation, right? You see it in the UK, you see it in the EU, you see it in China. Everybody is trying to create a foundation for regulation, right? And at a certain point, the United States is going to have to take the position like Vanguard is, right? That you're going to have to join the party at some other point, right? And otherwise, what's going to happen is going to happen like what happened with our CEO over at Vanguard, right? They're gonna ask him to step down because he's too late to the party, right? The train already left the station. You have to catch the late one, right? So the United States might not be expediting the process of getting proper regulation in place, but the rest of the world sure as hell is, right? I mean, look at what's happening over in Hong Kong, right? It's one of the few instances where you see the businesses, the politicians, and their constituents, they're all on the same page, right? This was supposed to happen sometime around mid-April, but all of these entities are getting together saying, look, we want to turn our country into a leading example for Web3 and for blockchain technology, and we all have to be on board to do this. And so they are meeting together once again. That date is sometime in April to create proper regulation around that. And the cool thing about that is, look, the mainland China is looking towards Hong Kong for an example, right? Remember what happened a few months back? Because there was this capital flight from traditional Chinese ETFs and ETPs into foreign ones. China, the mainland China, froze everybody's accounts, right? So they're a little hesitant to get in this space, right? Because obviously, as a country, you want people to invest in your products and not somebody else's, right? But if Hong Kong becomes a central hub for Web3 and blockchain technology, what do you think that's going to do to the perception of crypto back in the mainland? Well, one scenario is maybe, just maybe, they start to open up a little bit more. Maybe they bring back mining. And we've been talking about the effect of Bitcoin ETFs, what what effect that has had on price. Imagine when you get the second largest economy in the world to suddenly open up to this technology once again, right? So 240,000? Yeah, possible. Absolutely. Absolutely.
So we mentioned 4 things, right? Jay, you just mentioned one of them that we brought up last cycle, and Nate's talked about it a lot. You know, the testing grounds that China is using Hong Kong for, right? Hong Kong is a test for China. And if that test goes well, then China is going to adopt exactly what you're saying, Jay. They got some money. Now, China invests differently than the United States. The United States, 80% of our investment is done through institutions. It's kind of reversed for China. 80% is done in retail and about 20% in institutions. But nonetheless, if they allow their people to be more open to buying, that's going to open floodgates, right? We're talking about the second largest economy in the world. And if China does, you know that other countries that have been looking down on it are going to as well. Because let's face it, people don't want to lose to China, right? They don't want to lose to China. And so how you got to fight fire with fire. And the United States, like you said, is going to have some clarity at some point. But I'll tell you, we're already getting clarity by the SEC losing in court. That is already giving us positive momentum for crypto, right? And so even if we don't have regulation, we have sort of what I would consider regulation by court order, right? We're getting a positive law, because what happens? That sets a precedent for the future. So anything that happens there. And so that's a big win for the crypto sphere. So Taiwan, Hong Kong, China, Bitcoin spot ETF, Ethereum spot ETF. I don't even want to say yet, but we know Grayscale said they're already looking into other areas that their customers might want to invest in since Bitcoin has been so good for them. So they might be eyeing other coins and more ETFs in the future. So yes, we could continue to pump additional institutional money into the crypto market as more adoption comes worldwide. While the EU might be cracking down now a little bit, the UK is doing the opposite, it looks like, right? Hong Kong is doing the opposite. Some people want to be that tech hub. So yes. Anybody else want to touch on that? Any of those points that we're talking about?
Bean, so I know we tend to heavily focus on places like China and UK. There's this company that I've been following who this is actually pretty cool. So Walrus, one of the founders of Liquid Loans, he chimed in on this during our conversation the other day in the Telegram chat. But I was telling him that there is this company that I'm following, and they're trying to make waves in Africa to provide this Bitcoin-focused payment app called Strike to provide the people of Africa. I think this was particularly in Zambia. The ability to get out of their devaluing fiat currency into something that's a little bit more stable and something that has a lot of upside potential, right? So I know that we tend to focus in the United States, right? Here in the West, we tend to focus on Europe and on the EU. We tend to focus on China, but like this kind of adoption is going on everywhere around the world, right? And Walrus, like I mentioned, Walrus, he said his next stop after Argentina, he's going to Africa, right? Trying to promote that technology there. So this is a worldwide thing, guys. This is not just isolated to the big players. Right? This is happening everywhere.
And we're still early, kind of still early, right? Yeah. If Bitcoin gets to 120, it's still a 2x from current prices, right? If it gets to 240, that's a 4x from current prices. And if we get a little bit of a dip, then it could even be better for you there. So you're not too late to the game, but you might be soon, okay? And the world's changing and the technology is changing. We saw it with the internet. The internet changed the world as we know it. Is crypto going to do the same? Are we going to have a face melting bull cycle this cycle? Are we going to have a true super cycle? If not an extended cycle, which is what most people talk about when they say a super cycle, maybe just a blow off top to just incredible, unbelievable gains. Because we're starting to see some things fall into place that could take us there. It could. It's a scenario. It might not. We could end up, again, having a macro event. We could have something that happens in the world that, you know what? I hope you're ready, if that happens, to change your decision about when to sell. But nonetheless, we have a potential here for a perfect storm a brewing.
That is true. And the more and more that we're going into this, the more and more we're seeing like super cycle is like the possibility is increasing. And that's what I like seeing, right? It's like, oh, this whole like super cycle thing, it's like, okay, confirmed. Oh, things are just, they keep popping up, right? However, on a little bit of a, after euphoria and we've all gotten rich, so to say, and we've all, we've all been dancing with sprinkles and jelly beans, right? What happens afterwards? That's usually when you start getting into the depression and things start sliding down, and here we are into the next bear. Truthfully, I think what's going to cause that next bear, and watch for it this cycle, guys, is going to be when regulations are coming out and maybe they're not necessarily fair. It's just kind of like the governments of the world sort of putting their foot down, saying, okay, we don't know what to do at this point. We don't have enough clarity. Let's just do something. And in their attempt to do that, they're going to kind of stamp out the whole euphoria and fun times we are currently having now, right? Watch for that, guys, because I do think that's going to usher in the new bear. And it may start with the idea of banning self-custody. aka you can't be your own bank. How dare you? You have to go through us. It starts with an ETF and it ends with banning yourself as a bank.
You know, a lot of people, when most people think of the term super cycle, just like you said, Brendan, they think of the amount of time that it takes. Well, super cycle can occur in two different ways. Number one is most commonly what's thought of as a longer cycle. Number two is also you can have a price-based super cycle. All right, anything that breaks the trend that has occurred in prior cycles before. So, you know, Bitcoin went from 20,000 to 70,000 from top to top from 2017 to 2021. So that's about a 3.5x. All right. If Bitcoin can supersede a 3.5x, that could still be considered a super cycle based on price. So that 240, that 250 area, that's greater than a 3.5x. So we very well could be looking at that sort of scenario playing out where we still could have a super cycle just based on price as opposed to length of the market. So just keep that in mind.
Here's the thing too, Josh. We just want to add one more thing to the technicals there. So the other reason why that 240,000, 250,000 appears so regularly, not just in Josh's but in Richard Hart's analysis, but you'll hear that number thrown around by a lot of other different pundits here in the space, right? Is because on average, every single time you do a macro fib pull, right, from the very top of your last cycle to the bottom of your to the bear market of that same cycle, a very common retracement is all the way up to the 3618 and the 4236 area. And if you do that fib pull for the last cycle, that 4236 area sits right exactly at $240,000. So the technical supported.
I love it. I love it. So what's our last question? We're going to go to close. Really quick answers. If we hit the perfect storm theory, what could we see the total market cap of crypto at the end of the bull market when it's at its high? What are you guys thinking that we could potentially see if the perfect storm theory / scenario plays out? How high could this market cap go?
I seem to remember Josh mentioning it that a 3.5 to 4x is not impossible. So 10 trillion, just about there. 8 to 10 trillion doesn't seem unreasonable to me.
Yeah, I would agree with that because that would put Bitcoin at 4 trillion. And then, yeah, if Bitcoin takes up, let's say, you know, the low on the Bitcoin dominance is around 35 to 40%, then you know what? That's what's another 60% added to 4 trillion. Yeah,
10
trillion. Yep. So I think 10 trillion is 10 trillion plus. I will say I would agree with that.
Will, do you want to give a guess?
I got no guesses, man. I don't make predictions.
Buy and hold, baby. I love it.
Buy and hold.
Zenith?
I'm going to try to do some napkin math real quick. So if we have 19.64 or 19.64 million Bitcoin right now, and we hit 241,000, that means that Bitcoin alone will be 4.7 million, billion, trillion, 4.73 trillion. And then also, if we look at Bitcoin dominance during the peak of last cycle, it got down to 35%. So if we divide that by 0.35, then that means you get up to about 13.5 trillion market cap for all of crypto, if the numbers work out that way.
13.5, is that what you said?
Yep.
Nate?
It's funny how these things just line up, don't they? Because what did I say at the beginning of the show? 10 to 15 trillion. And Mr. Z over here doing the freaking math. There we go.
It's just some
Doing
quick
the
math. Quick and dirty. That was
quick math.
real dirty.
I mean, take a few trillion. I don't know. 10 to 15, somewhere in there.
Was your napkin math, was that on your Texas Instruments favorite calculator?
That was good old TI 36.
The classic.
I love
He
it.
had one in his left hand, one in his right hand. Just
So I'm gonna take this from a little bit of a different perspective. If we didn't have institutional money come in, we're probably going to be what from the previous cycle, 2 or 3x from the previous bull. Previous bull hit 3 trillion. That means we would hit 6 to 8 trillion, 6 to 9 trillion, somewhere in there. So I think we could maybe double that, double or triple. So instead of 6 to 12, we're now maybe 6 to 9. I'm now going to say maybe like 11 to 15, somewhere in that range. So not so different than what Nate's saying. I think on a low side, look, this is perfect storm scenario, right? So, but think about how many X's we could have if we get to a 10 trillion market cap in crypto. I mean, we're talking about everybody here that has bags is going to make it. And we might be able to even pump some more stuff out from the Degen Roundtable. And by the way, as we start to get to close here, we have a lot that we are working on behind the scenes. You only see us on the show here, but we have a call with all of us once a week to put out more content, to work on things, to build. And then individually between multiple of us, we have other calls to build blocks that are going to help us provide you more content in the future. So we are working really hard behind the scenes. We don't just come out here and just make a show and talk about it. There's a lot of work that goes into it. And it's a testimony to having really good people around me that are challenging me. And we're challenging each other to grow, to be better, to work hard. And, you gotta find a community. You got to find a group of friends that are like-minded, but are going to challenge you, that aren't going to necessarily just agree with you all the time. We do also, have differing opinions on how things should move forward. And with 10 people, that is more of a difficult, it takes a little bit longer to come to a consensus decision. So I just want to let you know we're building a lot. And so I'm excited to see where we're going to go during this bull market as well, because we want the bull market to perfect storm, but we want to be able to provide you content so you can stay in the loop, that you can stay knowledgeable and you can learn, okay? Make your own decisions. Join our Telegram. It's free. It's not always going to be free. We keep saying that, but we got to get bots out of there. We got to get people that aren't good out of there. And so it's not going to be free forever. In fact, it might not be free for much longer. To join, right? Just to join. Now, I want to start signing off. Will, I know you want to say something that we didn't get really a time to say, so I'll let you say it during your close off. But fire show, everybody. Will, what you got for us, buddy?
All right, so I wanted to do a quick little update for the folks at home who are using liquid loans. So one thing that I want everyone to remember, anyone who has a collateralized loan with liquid loans, that means that you're borrowing USDL and your Pulse is your collateral. There is a debt in front number on the very top right side of, or excuse me, top left of the screen. The debt in front means that this much money has to be redeemed when people trade their USDL back for Pulse. That's a redemption. What happens is the people who have the lowest collateralized ratios on their loans are paid off. When people put in the USDL and they pull the Pulse out, it takes the Pulse out of your collateral, presupposing that you are the lowest collateralized loan. So, like, let's say you have like a, God forbid, like 150% collateralization ratio, right? The guys who have the lowest collateralized ratios, their loans get paid off first. When people pay dollars in to get Pulse out, then that when they're redeeming their USDL for Pulse, they are essentially paying off the lowest collateralized loans. So if you guys are the lowest one on that ticker, your loan's going to get paid off and you're going to lose your Pulse. Now, you won't owe the protocol any money anymore, so it's basically a forced DCA, right? Because you took out a debt with the system, whenever somebody pays back your debt to get the Pulse back out, it takes it from the lowest collateralized volts. So just keep that in mind. If you guys have like I would highly suggest having as high an ICR, which is your individual collateralized rate, as possible. Have as high an ICR as possible. Today it jumped from it jumped like, I think, $8 million. So there was $8 million worth of Pulse that was collateralized, like, just today. So think about, or excuse me, $6 million. So think about that. The distance between like the people that are way above you in the collateralization rate, and then it jumped through it chewed through $8 million worth of people. So it doesn't matter like what your ICR is, or it doesn't matter what like how much Pulse you have pulled out. If that number hits you, it's going to start paying off your loan and you're going to lose your collateral. You'll lose your Pulse. So this is something for folks to keep aware of when you're using the liquid loans protocol. Watch all of the videos. Go back in our channel and watch the deep dive that we did with Nate and Tracker and Jeff and Walrus and all those folks, where they explained all this stuff, right? This is one of the things that a whole lot of people didn't understand, was the redemptions, right? So a lot of people have been losing their Pulse when other people pay it off with the liquid loans. For me, for closing out, you guys can find me at linktree/Will Stevenson. I'm going to be in the Texas area for another little bit here. So if you guys want to hit me up, we'll do a little meetup here in Texas. No problemo. I'm just going to post my link tree in the chat here in a minute once I can figure out my copy paste keys. There we go. It's all good anyways, because the chat's about 7 seconds ahead of what I'm saying that you guys see anyways, because there's a delay in the stream. So you guys can find me at linktree/Will Stevenson. If you're a Hexkin, you want to meet other Hexkins, then go to t.me/Hex_meetup. It's the little thing that's described right here if you want to meet other Hexkins. And that's all I got. Josh, my friend, what are you doing, bro? What's going on with you?
So I will be on Vets and Crypto Wednesday afternoon prior to our Whiskey Wednesday stream. So looking forward to that. If you guys are in the Telegram, we're gonna drop the link for that episode. It'll be sometime Wednesday afternoon. I want to say maybe 4 o'clock Eastern time. But I'll get more details later on. But that's what I'm doing Wednesday prior to our Whiskey Wednesday episode. So looking forward to that. Yeah, I mean, we always got stuff in the hopper, always got things coming up. So, staying on top of that. But yeah, great show tonight. Brendan, you killed it. Nate, you killed it. Panel, great job. Again, my name is Josh. You guys can find me on Twitter, on Instagram at Chocolate Taints. It's plural at Chocolate Taints. And that's where you guys can find me. I'm also in the Telegram. So make sure, if you guys haven't done so already, join the Telegram, hit that little QR code, or find the link in the description to join up. And I will catch you guys in there. You guys can DM me there if you guys have any questions or anything like that. Let's see. Zenith, what you got, bud? Where can they find you?
The people can find me at my link tree, which is Zenith linktree, the linktree thing /Zenith DI. There you go. Voila, in there. Please hit me up if you are hanging out in Vegas If you are hanging out in the Vegas this week, please hit me up on there, whether it's through the Zenith DI Instagram, Twitter, or the Hexco Space Force stuff. Hit me up. I want to hang out. If you're interested in going to a cigar lounge, In-N-Out Burger, multiple times, hanging out by the pool, maybe some casual Texas Hold'em, or shooting a interview, podcast, whatever, or book review, please hit me up, hang out. That's what we're here to do. By the way, I will not be hosting book club this Friday because I will be in Vegas, and the man hosting that will be this one over here. Will, what book are you guys covering this week?
So thank you, Zenith. For the folks at home, we're going to be covering Sci-Vive. So it's the book written by Richard Hart. We're going to be covering the Sci-Vive introduction and only chapter 1. This book is like 18 hours long or some crazy shit like that. So we're only covering the first chapter and the introduction. So look forward to that next week, guys. Sci-Vive. Make sure you listen to it on YouTube and read it.
Yeah, Sci-Vive, she thick. It's not something that we want to take out in like one fell swoop. So covering it in chunks, or maybe even having a special guest help us with it, that is honestly the perfect way to do it, in our opinion. By the way, I do want to show some love to people in our community. Boogie and the Twinkie, Mr. Angry Twinkie. They are streaming live with Dollar Cost Crypto right now. So after this, go show them some love. Let them know that we sent you. Passing it over to Jay. What you got, man?
Hey gang, look, it's already been said, but go ahead and scan that QR code, join our Telegram group. There is a ton of wonderful people in there, guys and gals, who do not mind sharing their knowledge and wisdom with everybody, right? Use them as your sounding board. Use them to bounce ideas off of each other. And don't be scared to ask questions, man, because that Telegram exists so that everybody in there gets better together, right? We do a lot of exclusive content on there. When shit hit the fan last week, we went live here on YouTube once, but the rest of the emergency streams exclusive to the Telegram group, right? And so if you want to be part of that group, if you want to catch those streams, if you want to catch those calls, go ahead and scan that QR code and be there, because the people that caught that stream did not miss out on this price action. As always, thank you very much for joining us this evening. We know that time is your most valuable asset, and we do appreciate that you spend some of that time here with us. As always, you can find me on X at _P90Hex and on Instagram at Agent _J Schroth. But the best place you can find me is in that Telegram channel. Until then, Nate.
Hey, yeah, I am Nate McGettit, the Ascending Man. You can go ahead and take a look at my YouTube channel. I got a personal one that I'm just talking about interesting things, right? Not necessarily crypto only related, but at the same time as well, like I have already stated before, I am putting that off for a little bit because, again, we are doing a lot of things here at the Degen Roundtable. We're prepping, and you guys are going to be blown away. So lots of good stuff coming. I have also opened up consultations. I've been coming across a lot of guys lately who not necessarily late to the boat, but the boat's starting to take off and they realize, I got to get on this boat. And so these people don't really know exactly what to do because it's kind of a little bit of a panic situation. Go ahead, hit me up. I got my link tree in the, I'll go ahead and send it again. Links guy. Yeah, I can be links guy now too. Will. So just send it in there. I do consultations, it's just $50 an hour. And I will get you set up with an attack plan of exactly what to do and then how to continue on. Like, you are going to succeed. And I'm going to make sure I do the best that I possibly can for you to be able to succeed this bull cycle, as well as going all the way into the bear and then coming through in the next bull cycle. And yes, you will be making money. So yeah, hit me up on there. And I just do it as a DM. But other than that, Brendan, take us out.
Thanks, Nate. Thank you, panel. Thank you, co-host. Thank you, Miss Producer. Everybody, I love this episode. I thought that we brought a ton of value to our community, and I hope our community found it valuable as well. I do see some comments confirming that. I think this will be a topic that we continue to revisit, to update you on every several months. I don't know if it'll be 7 months, but I could see us revisiting this again in the summer, during that potential pullback, and seeing where we're going from there. So I think this is a topic that, you know, is close to our hearts because we were the first one to start talking about this 7 months ago. Okay. And now we're starting to see some people sort of hop on a train of potential big opportunity this cycle in crypto. So community, please join our Telegram. Check out all of the content that we have. Watch our old videos that you haven't watched yet. Share with your friends. We'd really like to get to 1,000 subscribers on YouTube sooner rather than later. We just have so much that we want to bring to you, and we want to help change the world. We want to bring crypto to the people, and we want to keep the people safe from the mistakes that we've made in the past, or as much as we possibly can, because you're never not going to make mistakes, as Jay pointed out earlier. But the severity of your mistake can be drastically reduced by being part of a community like the Degen Roundtable. And if you couldn't tell, we're not always that degenerate. We're going to give you some real talk if you need it. Okay. So have your bags packed if you think we're going to have a good cycle. But yeah, thank you all. Super excited for the future. Thank you, panel. Thank you, Nate. Let's take us out of here. Perfect Storm Theory, episode 2 in the books.